Hello, welcome to this session. In this session, I'm going to talk on the leasing finance. So let's understand what is the lease. A lease is a contract whereby the owner of an asset grants the other party the exclusive right to use asset for an agreed period of time in return for payment of rent. A lease agreement is legal contract used when a party conveys land or personal property to the another party for a specific amount of the time return of payment. So a basic understanding of the lease, you may have seen the board on the property where where the lease word has been written. The property is on lease or the rent, right? So the lease and the rent, they both are the different word. So let me tell you the difference between the lease and the rent first, so you will understand this concept is a lease in a well manner. Okay, so let's say lease versus rent. Okay, so the main difference between the lease rent agreement is the period. Okay, is the is the period of the time they cover. The main difference between a lease and the rent agreement is the period of time they cover. A rental agreement tends to cover a short term, usually 30 days. Like I have experience when I was living in the Noida and the Pune. Whenever I shifted to the new house, new flat, I have done the rental agreement with the owner. So there is a short period, like we can take the flat for the at least 11 months, and the lease means we can take it for the more than 1 year to 5 years, we can say, for the renting the property. So while a lease contract is applied to long periods, usually 24 months, 36 months, all through 6 and 18 months contracts are also common. Once the lease term is up, it is exclusively extended to the month to month rental. So similarities between the leasing and renting. Lease and rental agreements have the following things in common, like they are specific to a period of time. They include a security deposits which the renter pays the landlord to the cover damages, but which the landlord returns at the end of the term. They specify what utility cost and maintenance the owner is responsible for, and what maintenance the renter is responsible for. They give rules for uses, including allowance for pets and landlord's right to entry. So it's important to read the contract closely to make sure you have a good understanding of terms and the conditions before you sign it. So the lease agreement outlines all of the aspects of the lease agreement so that each party understand his rights and obligation under the lease. Formal lease agreements are legally binding on the both parties, and the breach of the agreement or failure to enforce the provisions of the agreement has a legal consequences. Example of lease. Let's say suppose Fahim leases a house from Sitil. He signs a lease agreement that specifies the location of the home, the monthly payment amount, the duration of the lease, and annual requirements of the parties such as ban on pets. The lease is generally binding, so if he moves out early, he may be held liable to pay for the entire length of the lease, even though he was no longer living there. So he is the lessor, who is the owner of the property, and he is the lessee. Okay, so lessee is the making the agreement with the lessor for the particular period of time. He can take the property on the rent, and he is paying the minimum lease payment to the lessor. Lease financing is one of the important source. Now we are discussing the lease financing, one of the most important aspect of the financial decision analysis. So guys, please have attention here. So lease financing is one of the important sources of medium and the long term financing, where the owner of an asset gives another person the right to use that asset against periodical payments. The owner of the asset is known as a lessor. The user is called a lessee, that we had discussed in the last slide here, right? He is a lessee, here is a lessor. The periodical payment made by the lessee to the lessor is known as a lease capital. Under lease financing, lessee is given the right to use the asset, but the ownership lies with the lessor, and at the end of the lease contract, the asset is returned to the lessor or an option to give on the lease either to purchase the asset or to renew the lease agreement. As simple as that. Characteristics of the lease: rental agreement, maintenance clauses, cancellation provision, renewal options, and purchase options. So we'll discuss all the characteristics one by one. Rental payment: when a company cannot afford to fully purchase an equipment or expect the equipment to have a small useful life, it may opt to lease the equipment. The lessor owns the equipment and rent it out. The lessee makes regularly scheduled payment to the lessor for the use of the equipment. The lessee is expected to make a minimum payment during the contractual period that the equipment is leased out. The minimum payment is known as the minimum lease payment. Minimum lease payments are rental payments over the lease term, including the amount of any bargain purchase option, premium, and any guaranteed residual value, excluding any rental relating to the cost to be made by the lessor and any contingent renters. Maintenance clauses. A lease agreement typically specifies whether the lessee is responsible for the maintenance of leased asset. Operating lease normally include maintenance clauses requiring the lessor to maintain the asset and to make insurance and tax payments. Financial lease nearly always require to lessee to pay maintenance and other costs. Cancellation provision. Cancellation may occur when without justification. One of the parties to the lease agreement fails to perform the obligation arising out of the contract. In this situation, the other party has the right to cancel the lease with damage, if any. As a rule, cancellation of lease for non-performance of a contractual obligation must be based on the failure of fulfill a principal obligation. For example, change of destination of goods, non-payment of rents, and many more things. Renewal option. The lessee is given the option to renew a lease at its expiration. Renewal option which grant lease to right to release asset at expiration are specially is common in operating leases because their term is generally shorter than the usual life of the leased assets. Purchase option. Purchase option allowing the lease to purchase the lease asset at maturity, typically for a pre-specified price, are frequently included in both operating and financial leases. Different type of lease. So we have a two different type of lease: operating lease and finance or capital lease. Operating lease. Operating lease is a cancelable contractual agreement whereby the lessee agrees to make periodic payments to the lessor, often for 5 or few years, to obtain an asset service. An example of operating lease would be when a person is starting his or her own manufacturing business, but he or she does not have enough cash to buy machinery, then the person will take machinery on an operating basis. So that will be the operating lease contract. Features of operating lease. Given below are the features of the operating lease. Operating lease is a short-term agreement for the use of an asset between the lessee and the owner of the asset, that is the lessor. Various costs related to that asset like maintenance, taxes, etc. are paid by the owner of the asset. The term of the operating lease is always shorter than the economic life of the asset. The lessee can even cancel the operating lease prior to the end of the operating lease. The term related to an operating lease can vary significantly depending upon the agreement between the lessee and the owner of the asset. The rent which is paid by the lessee for the duration of the operating lease is lower than the cost of a asset. Financial lease. So we had basically two types of the leasing finance. One is the operating lease that we have discussed. Now we will discuss the financial leasing. The financial or capital lease is longer term lease than an operating lease, that is the non-cancelable. and obligates the lessee to make payment for the use of an asset over the periodic period of time. So total payment over the term of lease are greater than the lessor's initial cost of the leased asset. Example of the financial lease, so you will understand the in better way. So company C is engaged in the manufacture of bicycle. It has leased some specialized production equipment from company L. The useful life of equipment is 6 years and the lease term is 5 years. The fair value of the equipment is the 20 million and the present value of the minimum lease payment made by the company C amount to 15 million. The equipment is specifically designed to the operations of the company C, and lease contract contains a provision which allows company C to either extend the lease at much lower rates or purchase the equipment at the end of the 5 years for 1 million. The fair value of the equipment at end of the lease term is expected to be 4 million. So this is definitely a finance lease as indicated by the following. The lease term is more than 75% of the usual life of the equipment. The lease contains a bargain purchase option and the equipment is customized and cannot be used by any other party without significant modification. So under the Financial Accounting Standards Board, FASB statement number 13, according for lease finance or capital lease is defined as one of that has any of the following features. A lease transfers ownership of the property to the lessee by the end of the lease term. The lease contains an option to purchase the property at a bargain price. Such as option must be accessible at a fair market value. The lease the term the lease term is equal to the 70% or more of the estimated economic life of the property exists for the property leased toward the end of its usable economic life. At the beginning of the lease, the present value of the lease payment is equal to 90% or more of the fair market value of the lease property. So this statement is under the statement number 13 under the Financial Accounting Standard Board. So we have discussed the two basic types of the lease, operating lease and financial lease. So methods of the lease we will discuss in the next session. Thank you. Best wishes.